And a good agent will listen to all of this, take this all down, and will never put a property in front of a client that they don't think that they'll like. And the very best agents will actually be able to say, look, this isn't quite what you said you were looking for, but I think you'll like it. Have a look. What do you think?
Hey everyone, Darren here. The UK real estate market has been popular among overseas investors due to their historical stability in politics and economy. But with the Brexit, COVID-19, and the global recession, the real estate market has been on a downturn for many years. As the market has shown signs of recovering, are there any opportunities left? Today, we have Urosh to share his views. In this episode, we cover some major key questions that a lot of people have, such as the impact of COVID-19 and how the British National Overseas Visa Scheme impact the market. Without further ado, please meet Urosh and hope you like the show. Thank you. Hey, so welcome to the show.
Hi, everyone. I'm Urosh Teodorovich. I'm the general manager at Locations Real Estate. Locations is a Hong Kong-headquartered boutique property agency which offers expert advisory in overseas investments as well as also in the Hong Kong local market. Our team consists of a team of industry experts with extensive experience in the sector, which of course gives our clients confidence and peace of mind in making their decisions, whether that's buying a £9 million penthouse in central London or upsizing to a new rental property in Sai Kung.
Yeah, this is a very exciting topic because I'm sure we all know here is that the tie between UK and Hong Kong is very strong. And then I was looking for someone from UK to tell us more about what's going on because there has been a lot of things happening in the UK for the past couple of years. And then a lot of people are more and more interested in looking to UK investment. So thanks for coming in and then thanks for making the effort to be and share with everyone here.
My pleasure. Thanks very much for the invitation.
Yeah, so let's to start with, for people who might not be familiar with UK, would you mind briefly explaining to the audience the regions in the UK that overseas real estate investors tend to invest? And at the same time is that how you distinguish the area in terms of risk and reward?
Sure, no problem. Obviously, it's one of the most important questions that gets asked. I would say broadly speaking, UK investment typically centers on London. It always has, capital city, it makes sense. But in recent years, this has developed into other very important second-tier cities. And I'd say that after London, I'd say Manchester, then Birmingham, and then Liverpool have been core areas of focus. Now, when you mention risk reward, of course, this will depend somewhat on the needs of the individual investor and what their requirements are, and in a sense, how much they're willing to expose themselves to risk. So broadly speaking, let's say the more blue chip investment areas. So, looking at prime central London. So even someone unfamiliar with London would be familiar with places like Knightsbridge and Chelsea and what have you. These sorts of areas on a longer timeline will usually be safe, but they might not have the same percentile gain potential as, let's say, fringe redevelopment areas. So places like Stratford or Ealing, which are along the Crossrail project in London, or for that same logic, any of the northern powerhouse cities such as Manchester, Liverpool, Birmingham, which I've already mentioned. But of course, any potential upsets to the market will likely impact those areas first, and it depends on always, the need to liquidate an asset at short notice. So anywhere where there is always going to be, a stronger demand in those kind of blue chip areas, they will be safer, but as such, they command higher prices.
That's kind of cool because like in Hong Kong, right? Obviously, we see a lot of real estate opportunities from different places in UK. And then like, obviously I think this episode focuses on more the big picture. And I think maybe in the future round two, we can do a specific different regions because in real estate, the most important thing is that how do we know somewhere in some place have opportunity from miles away? So with those areas you just mentioned, right? Are there any areas you think that are overrated or underrated?
Well, so I actually mentioned Knightsbridge by name, so that actually brings me a good point into the what I see as perhaps the more overrated, but I'll need to explain in a little bit more detail. So the ultra lux, or what we could also describe as the super prime areas, these world famous parts of London. I mentioned Knightsbridge. Harrods department store is extremely popular with a lot of our Far Eastern buyers who might know that as their key London landmark, more so than Buckingham Palace in some respects. But in these areas, you've got prices per square foot which are comparable to Hong Kong's top residential areas, and yet most of these properties come without gyms, with pools, or any of these other facilities by comparison. So I would say that these can be seen as somewhat overrated, especially with the prices that they command. But that being said, in the current market conditions, transactions are down roughly 53%, according to a recent Coutts report, and real prices in areas like Knightsbridge itself have fallen as much as 23% from their previous peak. I personally think that this kind of price drop for the people that really want to be in these ultra prime areas could reinvigorate demand as people start hunting for these ultra luxe bargains. On the other hand, looking at, let's say, the more underrated side, now this will be a bit of an interesting one because not so much an area so much as a type of investment that I think is a bit underrated. So I'm sure as anyone who's even started to consider looking at overseas property investment, they will know that you can't go to any hotel in Hong Kong on a weekend. Perhaps now with the coronavirus, it's a little bit different, but in normal times, you would go in every single exhibition room, whether one was in the former Excelsior Hotel in Causeway Bay, all the way to the Mandarin or the Marco Polo on Kowloon side. You can't go to any exhibition room without there being a property exhibition. And that could be Bangkok, could be London, could be Manchester, could be New York, could be LA, Sydney. There were projects all over the world. And I would say that the sheer number of UK developments being sold off plan across Greater China, so including, not just Hong Kong, but Shanghai, Beijing, what have you. I think the number of these developments coming out where they're, of course, every agency that is putting up these projects is going to say that they've got the best project in London or the best project in Manchester. And so I know from personal experience, speaking to a number of my clients, that many have found it difficult to navigate the options available. And this is actually where I think expert advice becomes most important. I would say that because some people have tended to get a bit put off by off-plan or new build investment, I would say that to consider this. If an investor has no intention of ever living in or using a property themselves, then I would say that new build projects in both London and in the north of England can often be bought at this exact unusual time with fairly substantial discounts.
I see.
And these properties also, in most cases, come with, let's say, 5 to 10 year builder's guarantees for the property. Anywhere, like I said, anywhere from 5 to 10 years, depending on the project. Now, given that everything is new in a new build, this makes for a very low hassle investment because landlords over in Hong Kong or Shanghai or Guangzhou or wherever, they don't need to worry about boilers stopping working or radiators leaking or old copper wiring that needs to be replaced, or any of these other very real and very important issues that can face buyers who purchase a period property by comparison. So for this reason, I think, yes, there's a lot of different projects out there, but with the right advice, choosing the right project can be a very sensible and shouldn't be, I don't think it should be sidelined as a potential investment option.
Thanks for the detailed explanation because there's something that
pleasure.
Also, because like I told you before, right? I used to work in a real estate fund that focusing on UK asset too. And I felt it's pretty similar when it comes to like UK asset because, there's a lot of things changes for the past couple of years. And then I think that right now is a good time to go in. which obviously we're talking about UK markets. You cannot not talk about Brexit still. And what kind of impact does, we both know it's a long impact, but how's changed since the Brexit has formally confirmed? And then from the past and currently or outlook, how does Brexit impact the market in your point of view?
So I think there are two ways to look at this. Look, from my personal perspective, I think that Brexit really shook up the market most with the initial referendum back in 2016. Okay, I think that that's probably where the biggest repercussions felt, let's say, on the property side, as working within the industry and helping clients to invest overseas. That was the time where we saw the biggest impact that would affect your average investor. Let's put it that way. Since then, I would say that the most major effect that has happened, or that will continue to be the case, is that the GBP has been kept extremely low. There's a lot of pessimism about the UK's, about its economy, about the political future, about trading opportunities, and so forth. And as a result, it's kept the sterling at a very low level, essentially for the last 4 years. And I would say that on top of all of the excellent reasons that there are to invest in the UK, interestingly enough, one source I'd recommend, Savills, they've got an excellent research team. And on their blogs recently, they've been doing a series of posts. I'd recommend anyone of my clients or anyone interested in this aspect to go check them out, because they talk about the price of acquiring, holding, and selling properties at, off the top of my head, I believe it's $650,000 equivalent, $2 million equivalent, and then I think they do an ultra-lux series at 5 or 10. I can't quite remember the top one. But this is a very useful guide, because what it shows is that Britain typically, and London specifically, ranks in the cheapest to buy, hold, and sell of any of the major world cities. When you think about Hong Kong stamp duty, it's London, even at the top tier for luxury properties, is a veritable bargain. But I would say that from the Brexit perspective, you've got this currency play angle. So on top of all of the other reasons to invest in the UK, ultimately it's stood through many different issues historically, and Brexit is just, whether one is for or against, it is simply seen by most as just another thing that will be addressed, handled, and that ultimately is just another step on the sort of road forward, to use a bit of a cliche, but yes.
Yeah, that's good. And at the same time as this, right? Brexit is one of the variables. And how about COVID-19? Because I remember that a lot of people I know who works for UK deal, they said that before the COVID is getting really popular, and then the market died again from COVID-19. So it has been a while already. And then how has the virus impacted the real estate market? And then where are we right now, do you think?
Well, I'm always happy to say this to clients right now, is I get to give you some news with a big smile, which is that for a rare situation, I would say that really coronavirus has, in the only possible small benefit I can see, has given a situation where it is much more of a buyer's market at this time. I think that you mentioned about your own contacts. I've seen exactly the same thing. Calling, my associates in London from when I was in Hong Kong, or calling, and now seeing on the ground here in London the situation. I would say that very simply, it froze the market. I think when it went into lockdown, a lot of people were really excited. They were talking about this Boris bounce, that the market was bouncing back, transactions were going up, and there was a real atmosphere of positivity earlier this year. Then unfortunately, of course, coronavirus happened. It's caused huge impacts, not just to the UK, but worldwide. And I think that the simplest way to describe this is even deals which were quite far along were ground to a complete standstill. And I think that many sellers, as a result, let's put it this way. They all thought, okay, fine. It'll be 1 month, maybe, of lockdown. Then 1 month passes, okay, maybe 2 months. And I don't think anyone anticipated it would quite go on as long as it has. Why is this good news for any potential buyers? Well, a lot of sellers are increasingly motivated to sell for different reasons. And as such, I would say that buyers coming in from overseas are in a slightly more emboldened position in that they, I think until recently, Hong Kong had a much lower coronavirus situation, much less detrimental coronavirus situation than comparable other Western European or even sort of North American locations. But what I would say is that with these buyers coming in from Hong Kong, they have the opportunity now to be quite aggressive in their offering. And I think that is the discount levels that I've been able to achieve off of asking price from my clients is something that I haven't seen. I don't think I've seen this sort of level in the last 5 to 8 years easily.
I see. Sorry, keep going.
No, sorry, that was
okay.
That was it.
No, sorry about that. Yeah, I found that a lot of people are more urgent recently. I think they talked a lot about the stamp duty changes. And would you also elaborate on that as well and how it would impact the real estate market? So
the way that this stamp duty holiday works is actually very simple. It is a measure that was introduced to boost the transaction volume, which I actually mentioned earlier that there was a recent Coutts, which is the bank, that they produced a report saying that transaction volumes were down in the region of 53%. Now, obviously, in a move to bid to increase the number of transactions in the market, the Conservative government here has implemented this stamp duty holiday. Now, this applies to any properties which are purchased but which complete before the 31st of on or before the 31st of March 2020. Now, this, I would say, as expert advice, I would say that this is great for anyone looking at, particularly into Manchester or Birmingham or Liverpool, because at £500,000, of course, you could find different properties in London, but they might not be as centrally located. But with a budget of £500,000, really, you could have the sort of top tier ultra prime of Manchester or Birmingham or what have you. Now, these properties up to £500,000 sterling are completely stamp duty free, provided they complete. So that means the project completes and it's ready to live in before the 31st of March 2020. However, and this is an important however that I think is a distinction a lot of buyers in Hong Kong or across Greater China would be interested to know. Because unless you are a first-time buyer looking to live in that property and are a British subject, overseas buyers and or second home buyers, or what they call landlords, so buy-to-let investors, will still have to pay the usual additional 3% stamp duty on their acquisition. So it's important because I would say that people telling investors that it is completely without stamp duty, even if they're an investor based in Guangzhou who is never going to live there and just wants to rent it out, there will still be some stamp duty requirement. But that's not to say that they aren't saving a pretty substantial amount of money by purchasing within this window. So as a result, I would say our transactions that we've been doing for the most part have been below 500,000 and in the north of England. But that has been for buyers wanting to take advantage of the stamp duty aspect.
I see. No, that's good because you clarify a lot of things that I have a question too. And then, but also, we both know I'm from Hong Kong, and then you cannot not ask this question is that how would the new the BNO Visa Scheme, like, potential impact the market? Because I think that's a topic that I told my friends about asking you this question. They're like, oh my God, you have to ask it. I don't know what the hell is going on. So would you mind elaborate on that?
So actually, I'm be very happy to answer this question because, of course, it's something on everyone's minds at the moment. The newspapers, both in Hong Kong and in the UK, are reporting heavily on this new BNO scheme due to start next January. We ourselves, Locations Real Estate, has partnered with a top immigration solicitor here in the UK to offer initially free consultation and then advice on the quickest path to take advantage of that. But I would say that the simplest way to describe what the impact of that will be, as far as I see it, is that having spoken to a number of my clients, and especially some of the more conservative ones, because of course this is a political hot topic. I think the international political wrangling of this, we don't have, I wish I had one, but I don't have a crystal ball. I can't see in the future as to what different, international superpowers will do. But assuming that the BNO visa program is able to go ahead, I would say that even on a conservative basis, my clients anticipate in the region of 100,000 Hong Kong Chinese families who would likely take advantage of this and as a result relocate to the UK. Now, if you figure that the average Hong Kong Chinese buyer, from, I can say anecdotally from my experience, but many of my colleagues and I have always compared notes on this. Generally speaking, a Hong Kong Chinese buyer goes in for about £750,000 up to around 1.2 million if they're buying a buy-to-let investment in London. Now, if you times, even the midpoint of those numbers by 100,000, it starts to become quite a dramatic number. And that's the amount of money that is potentially going to be coming into the UK market. And Hong Kong people, I'm guilty of this myself, having been born and bred Hong Kong, and family was there for 3 generations. We are used to a city where we have very close public transport, where everything's easy to get to, and I would say that we expect that anywhere we'd really want to go, we should be able to get there in about 15 minutes. London, of course, is very massive geographically, so it's quite different. As such, I think the biggest impact is going to be that prime areas, very convenient locations, areas which are desirable, are probably going to be targeted quite heavily by these incoming buyers. Now, that said, Hong Kong buyers, in my experience, are extremely savvy and are they're very good at sniffing out a good deal. And I would say that I mentioned that I thought that super prime in some cases was overrated, and I stand by that. But I would say that, on the other hand, being clever and navigating the market such that, if you know that a road over here will be, £3,000 a square foot, but just a 7-minute walk over this way, it might be, 1,500 or 2,000 or what have you. You can actually buy tactically and end up living in some of London's very, very good postcodes without having to pay that top dollar for it. And I would say that in some respect, what we at Locations have been doing is creating that link between London and Hong Kong, such that even for buyers who are less familiar with it, we can explain what London is like in terms of Hong Kong. And I think that having that, that local market knowledge on both sides is incredibly important.
Yeah, for sure. I think that's the struggle with investing in UK, because people have a very emotional tie to people in Hong Kong. And the same time is that people keep forgetting that it's not Hong Kong. So a lot of things that it makes sense to us in Hong Kong, how it works, it doesn't necessarily make sense in UK. And they need someone on the ground actually understand UK to explain to people in details, like, hey, maybe if you're living there, it'll be different than you actually investing, or how is it like, what it's gonna like, and then what you should do about it. Which comes to my next question, right? What are some advice and tips you can share with the audience if they're interested in investing in the UK properties, regardless are they from Hong Kong, China, or somewhere else?
So I know this might seem like a cliche or like a marketing pitch from someone in the industry, but honestly, I can't stress this enough. Have a good agent. I think making sure that you have a good rapport with, whomever you have as your agent, and making sure that they understand your personal requirements and objectives. Too many agents will send absolutely anything to all of their clients all the time, and the kind of hopefully something will stick approach. In most cases, I've spoken to a lot of my clients, and their previous experience was that agents would send them anything and anything and anything. And eventually the hope was that the client would actually choose something because they were exhausted, not because they found something they actually wanted. This is what I would describe, frankly, as a bad agent, but unfortunately, it's a very common practice. Now, from the client side, I'd say that a tip for what they can do as well themselves is to communicate, to be clear with your agent. Always ask as many questions as possible. And this might seem crazy, but be as specific as you can. From my experience working, in the sector, and especially on dealing with ultra high net worths, where they tend to get the best opportunities at the 25, 30, 35 million pound mark. The reason they find these amazing properties and they find the ones that are right for them is because they're willing to spend an hour and a half, 2 hours just talking about what they want and what, more importantly, they don't want. And a good agent will listen to all of this, take this all down, and will never put a property in front of a client that they don't think that they'll like. And the very best agents will actually be able to say, look, this isn't quite what you said you were looking for, but I think you'll like it. Have a look. What do you think? And that kind of relationship is totally invaluable. And frankly, it really doesn't matter whether a client is buying for £200,000 in Liverpool or whether a client is buying for £50 million in London. At the end of the day, they should be getting the same quality of service, and they should also be getting the same quality of advice.
That's really good, because I think that's what DENZITY also want to do, is because we felt that there's a lot of bad players out there. There's good players, great players, and there are a lot of bad players. And a lot of people keep forgetting is that you have options. And hopefully someone like you, we find more people like you to help more clients and help more people, because reality is that, it's very hard to sometimes to understand these concepts, because real estate is not something that is everyone knows about it, everyone has familiar experience with it. So I just want to say thanks for your time, because there are a lot of things even in my head I want to go into detail. But before we go, right, would you mind telling the audience how they can find you and reach out to you to more detail and more surface?
Certainly. So if you're interested in finding out more about investment opportunities in the UK, or if you'd simply like to arrange a free real estate consultation, please feel free to contact me directly. I'm Urosh, and my number is plus 852 6276 8567. I can be reached by that by call or by WhatsApp, or you can email me at urosh.teodorovich@locations.com.hk.
Yeah, and I have everything in the show notes. And then obviously, I'll include everything you just said. And then I just want to say thanks for your time. And then I'm sure a lot of people who watch this will appreciate your insight, because even a lot of things you said before is different than other guests we have, is that you're very detailed and then explain to people, really want them to understand what's going on. So I hope that you come back for round 2 in the future. And then again, thanks for your time.
It's absolutely my pleasure, and I look forward to the next time we're able to speak on maybe an even more specific topic.
Yeah, for sure. All right, thank you. See you next time.
My pleasure. Thank you very much. Speak soon. Bye-bye.
Bye. Thanks for watching. What do you think of this episode? Please let us know in the comment below, and be sure to hit the subscribe button to keep in touch with us for upcoming videos. But before we go, I want to give a big shout out to Patina Design Lab. They're the one who help us in making our brand, art direction, as well as these videos. They are a strategic design consultancy firm to help businesses with a wide range of design services, from industrial design, branding, graphic design, art direction, content creation, and many more. They are a very talented bunch,
and I urge you to check out their website for their work. That's all for today, and see you next time. Cheers.